Everybody loves the word guaranteed, but what if that word is quietly picking your pocket while you sleep? The insurance industry figured out a long time ago that guaranteed issue sounds like a golden ticket, but the fine print tells a very different story. Let's back up and explain what we're actually talking about, because most people hear no exam, guaranteed approval, and assume they've just found a cheat code. What these policies actually are is a type of life insurance where the insurer accepts everyone, no health questions, no blood draw, no doctor's note, and in return, they structure the product in a way that almost guarantees they win financially. The reason these products exist is rooted in cold actuarial math, not generosity. Insurance companies know that the only people rushing to buy a policy with zero questions asked are people who already know they can't pass the questions. So the risk pool is automatically stacked against you before you sign a single page. Think of it like a casino that lets anyone sit at the blackjack table, but quietly changes the payout odds before you get your cards. The house isn't being charitable, it's being calculated. And that calculation almost always favors the house over the sick, the elderly, or the financially desperate buyer. One of the most brutal mechanics built into these policies is called the graded death benefit, and it is exactly as ominous as it sounds. If you die within the first 2 or sometimes 3 years of the policy from almost any cause, your beneficiaries don't get the face value. They get your premiums back plus maybe 10%, which is essentially a savings account with a gothic aesthetic. Now, here's where the historical irony gets rich. These products exploded in popularity during periods when health insurance access was chaotic and medical underwriting felt discriminatory. People were genuinely being rejected for pre-existing conditions, and guaranteed issue became the scrappy underdog product for folks who had been turned away everywhere else, which gave it a hero narrative it hasn't fully earned. The statistics paint a complicated picture. Premiums on guaranteed issue. Whole life policies can run 2 to 3 times higher per $1,000 of coverage than a traditionally underwritten policy for someone in average health. You are essentially paying a massive surcharge for the privilege of skipping a 10-minute phone interview, and for many buyers, that trade-off makes absolutely no financial sense. The misconception worth destroying right now is that no exam automatically means no risk or no catch. No exam is simply a distribution strategy. It speeds up the sales process and reduces friction. But many no exam policies still ask health questions, use prescription database checks, and motor vehicle records to underwrite you quietly in the background without you ever knowing. So when does guaranteed issue actually make sense? It makes sense when someone has a truly serious, uninsurable condition, has exhausted every other option, and needs a small policy typically capped around $25,000 primarily to cover final expenses like funeral costs, so they don't leave that burden on their family. The lesson history keeps teaching us is that the right product in the wrong context is still the wrong product. A guaranteed issue policy sold to a relatively healthy 45-year-old who just didn't want the hassle of an exam is a financial mismatch that compounds quietly for decades. The practical, unemotional strategy here is to always try traditional underwriting first, even if you're nervous about your health history. Because you might be pleasantly surprised, insurers evaluate dozens of variables, and a controlled condition managed with medication often qualifies better than people expect. Size your decision around your actual situation, not your anxiety about the process. There's something philosophically absurd about an industry that charges you the most when you need help the most, and that's not an accident, it's a business model. But understanding that model is how you stop being a character in someone else's profit story and start being the author of your own financial plan. Discipline here means doing the homework before desperation sets in. Because buying insurance when you're already sick is like buying flood insurance when the water is at your ankles. The terms will reflect your timing. The best position is always the one you built before you needed it, with calm hands and a clear head. At the end of the day, guaranteed issue isn't evil, it's a tool. And like any tool, its value depends entirely on whether you're using it for the right job. Know your options, know the graded benefit period, know what you're paying per unit of coverage, and then decide with your brain, not your relief at being approved, Whether any of this sparks questions about protecting your family, planning your estate, or simply getting your financial house in order, check out our links in the description below, where we can help you get started in real estate investing, home contracting work, and finding the right lenders for your situation.